dismiss history at our peril.
Liberty Nation Radio with Mark Angelides.
Welcome to Liberty Nation Radio. We have an incredible lineup on the show today covering the new Fed chair nomination, Trump accounts, the housing loneliness, and the upcoming SAVE Act. It's going to be quite the show. Remember, Liberty Nation Radio is sponsored by LibertyNation.com, where you can access podcasts, breaking news, analysis, a range of biting and brilliant shows to whet your appetite for freedom and your fondness for the great American Constitution. And welcome to Liberty Nation Radio, heard coast to coast on the Radio America Network. I'm your host, Mark Angelides. We're very fortunate to be joined by Liberty Nation's Economics Affairs Editor, Mr. Andrew Moran, back in the studio. Thanks for being here, Andrew.
Thank you for having me.
So the big news on the economics front is the name being put forward to be the chair of the Federal Reserve, Mr. Kevin Warsh, or as you wrote in your fascinating article on the page of LibertyNation.com, The Art of Warsh. And I thought that was both clever and entertaining. So congratulations there, Andrew. I hope you're as clever and entertaining on this segment as you were in the article. So now we'll find out. We've before camera we were discussing Woody Allen books and Schopenhauer and the misery and the mundanity of life that certain people hold. So let's jettison that element and let's look forward to what is Mr. Warsh going to bring to the Federal Reserve, assuming he gets through nomination.
Well, you can see how the market reacted to when Trump made the announcement of Kevin Warsh. I mean, U.S. stocks sold off, precious metals sold off, treasury yields were, a little changed. So overall, I mean, he brings a hard money hawk stance to the Federal Reserve as he did when he was
That's all good for the dollar, right? That's all good for the dollar.
Absolutely. You look at the U.S. dollar, that thing rallied 1% when Trump made his announcement. And U.S. dollars, if everyone has been following it, it's been on a downward decline for like 10% over the past year. So, he's good for the U.S. dollar. But that's contradictory to what the White House wants to accomplish, because if it wants to accomplish greater exports, it needs a weaker U.S. dollar. So Trump was asked recently, what do you think about the U.S. dollar? He said, I love what's happening to the U.S. dollar. It's fantastic. But, if Warsh follows through on his reform agenda, that would be bullish for the U.S. dollar, but not necessarily for Trumponomics.
So I think that the general perception of what the Fed does is it controls interest rates, and that's about it. But it controls that based on its dual mandate, right? So first, what is I guess we all know what Warsh's opinion on the interest rate is, right?
Interest rate should be lower, but he has a different idea of how to get to that path. I mean, one thing he really wants to focus on, based on his overall comments, whether his interview with Hoover Institution or his appearance at the Reagan Foundation or at the Brookings Institution, his argument is that less control of the balance sheet, less expansive notion of the balance sheet, letting it shrink, and then overall over long term, and that would bring interest rates lower. But whether he's going to take that fast and furious approach, as some had thought would happen, like with Kevin Hassett, that remains to be seen. But he's really going to take, based on what he says. I mean, who knows if he's actually accomplished it? The federal governors, they take incremental reforms. I mean, based on what he's talked about, he wants to have it take a chainsaw to the whole thing and completely transform it. But it'd be amazing to see how less. Summarize what he said. He says a little less running of the printing press, a little smaller balance sheet, and you can restore greatness to the Federal Reserve.
I mean, it doesn't seem unreasonable, right? A little less printing press go brrr, and a slightly smaller balance sheet. It doesn't necessarily sound like that's economic chaos ahead, does it?
Well, to the U.S. stock market, I mean, that's the death knell of it, because the idea with the stock market is that the Federal Reserve is going to intervene no matter what. How it's always it's always in a crisis mode, and that for example, one thing that he wants to change is forward guidance, and forward guidance is a relatively new phenomenon that occurred in the Federal Reserve in its 100 plus year history. And starting in the early 2000s, the Federal Reserve incrementally brought in forward guidance, meaning So, for example, in 2004, Alan Greenspan said, we're going to have likely higher interest rates over the coming years. And that was the first test of forward guidance. Then Ben Bernanke, during the global financial crisis, he said, it's the likelihood because of current economic conditions, we're going to have lower interest rates for an extended period of time. And that's been the go-to for the Federal Reserve. Now, it's been curtailed a little bit. Jerome Powell, he would say, oh, we're going by data dependence, or we're going meeting by meeting, but there's still that forward guidance element to it. And so what Warsh wants to do by eliminating forward guidance, he says that the Federal Reserve should be front and center. The investors should not be on the edge of their seats based on every single meeting of the Federal Reserve. You read Liberty Nation News, for example, and there's always this thing whereby, what the Fed says to this jobs report is what really matters. So if it's a bad jobs report, the Federal Reserve is going to start cutting interest rates, and that's bullish for the stock market. He wants to take a different approach. He wants to go back to what it seems like the 1990s, where the Federal Reserve is not as communicative as it was during the Ben Bernanke, Janet Yellen, and Jerome Powell era.
Okay, so I don't know. I guess from an international perspective, the idea that there'll be no forward planning, which means that no forward prognostication, I guess, about market conditions, and if they're just, this is where we're at now, therefore this is what we should do. It seems like everything across on an international stage would kind of fall into line there, because that there's not a whim driving it. So it gives I think this is the right way to look at it. It removes the unpredictability factors where you can just look at, and of course things trail. We know that they trail. It's not exactly, this is what happens on day one. But there's a certain predictability. So you can look at, you take the last 2 quarters reports, and you can look at that and say, well, based on those last 2 quarters reports, I pretty much know what the Federal Reserve's going to do, or what their position is going to be come the next FOMC, right?
Yeah, I mean, pretty much. I mean, that's what the whole point of the forward guidance was, is that you're supposed to remove that unpredictability and create, a lasting impression for the financial market. So it's not a guessing game. And Christopher Waller, he's a Fed governor, and he was a contender for the Fed chair position. And his argument is that, the Federal Reserve doesn't have a crystal ball. It doesn't have great forecasting. It can maybe look out 6-8 months into the future, but can look at what's going to happen in 2027, 2028? Probably not. And then also, to your point, Kevin Warsh would say, it's a swivel chair problem, whereby, if a Fed governor says interest rates are going to be 2.5% in the year 2026, and we're going to, lower the balance sheet, then the problem with that is that they're going to stick to their words. They're going to stick to their prognostications rather than based on economic fundamentals. So that's the whole point of what Warsh has said to curtail near-term forecasting, to either revise or abolish forward guidance. But then the other hand, critics will say, well, then what do you have to hide? I mean, do you really need to be the man behind the curtain? Can't you not just speak to the Federal Reserve as it does now during press conferences and its post-meeting FOMC statement and minutes? Why do you have to hide behind that? But I can understand Warsh's point, how if everything goes by it's so sacred what the Fed says, then you're not going to have a market based on fundamentals. You're going to have a financial market just based on what the Fed does and the most powerful tool in its arsenal, which is interest rate policy.
Yeah,
or I guess you could say QE, but that's intertwined.
Sure. It's I don't know. It's quite a complex situation, isn't it, that you have currently, because we can say that Jerome Powell, Jay Powell's not going to cut by a quarter point, or he's not going to cut by a quarter point, but it's all the associated ephemera that goes around that is creating a lot of market volatility. And you already have that with the president. What you don't need is that from the Federal Reserve as well. They shouldn't be operating in a similar manner, whereas one statement from another can upset things. It should be that one acts as a linchpin and one is off doing the wildness. And I think if the current Fed's behavior is better suited to a more staid and steady president than Donald Trump. But with Donald Trump as the president, you need something a bit more staid and steady with the Federal Reserve. Or have I got that whole thing wrong?
Well, to your point, one thing that I admired from Kevin Warsh is how he sounded like a Milton Friedman type individual, where he was blaming the Federal Reserve for the fiscal deterioration going on in Washington. And that's the first time I've heard either a Fed contender or a Federal Reserve leader make that admission that it's the Federal Reserve subsidizing all this reckless spending in Washington. Also to your point, there was an interview, I think, with CNBC last year, when he said that the Federal Reserve should have a policy alliance with the Treasury Department, whereby and so, for example, in 1951, they created a famous alliance whereby after the Second World War, the Federal Reserve would be independent and it would be responsible and it would know what the Treasury is doing. Before that, the administration, the Treasury, it would force the Federal Reserve to cut interest rates drastically, to run the printing press, to afford the guns and butter of the Second World War and all the spending that occurred. So this whole one thing leading up to his announcement, the fear was that he's not going to operate it. He's going to eradicate. There's a fear that the Powell successor is going to eradicate Federal Reserve independence, and it's not going to be monetary policy sovereignty. It's going to be dictated by the White House. But based on the market's reaction, you can see that, okay, that's not going to happen. It's going to be an independent Federal Reserve, but not so much whereby everyone is just so worried day by day how it's going to be the last instrument of lending, and it's going to be the last instrument of controlling economic conditions, and that it's just going to be someone who, in his interview with Hoover Institution, he cited Milton Friedman's idea whereby you have the Federal Reserve comes out once a year and it says we're going to raise the printing press by 2%. We're going to grow the money supply by 2% to account for economic growth and population, and that is it. And in a way, I mean, the goal should be eradicating the Federal Reserve, but the next best thing is probably what Warsh has proposed doing, which is shrinking its power and not making an omnipotent institution.
So we're saying there's a Puxicatawny Phil of the groundhog variety coming to the Federal Reserve, and that might be springtime coming around the corner. Andrew Moran, we'll be back with you after this short break. Don't go anywhere.
We dismiss history at our peril.
Liberty Nation Radio with Mark Angelides.